Power of the mob in America and nothing short of it. We aim to end their profits, imprison their members, and cripple their organization. Imprison their members and cripple their organization. Cripple their organization. Imprison their members. Break the power of the mob.
Give a few more minutes for folks to roll in. What I'm doing today is kind of a supplement of my webinar yesterday. Not enough people, I feel, got to see it because unfortunately, I found out apparently the link was broken. So people were unable to actually get into it. So I find that to be unfair. So I do want to be able to open it up. Thank you to anyone who was there. And like I said, if you were there, you've been enrolled actually in a draft for a free copy of Quentin's book. That's the mortgage guy who was there. So today I'm going to go over my presentation and a little bit of what I did, because a lot of the people that got there ended up getting there a few minutes late. I wanted to kind of give some time for people to come in, but unfortunately, in the interest of corporate time, we had to go a little slow. So give me like another minute or two, and then we'll get it started. I'll drop the link in the chat so that if anyone does have questions after I finish my presentation, you can go ahead and ask your questions, and we can get that going. So what I'm going to start doing is trying to do these every weekend, and, give me some feedback. Obviously, it's going to take a little bit of time to grow, and I'm going to start talking about a lot of other stuff. I think Monday and Tuesday, I'm going to drop my videos. I did some articles on cryptocurrency. Being a financial advisor, those are the types of things that I actually do have to pay attention to. I don't speak to them a lot, but I do have to pay attention to those things because that's market volatility, and those are some of the things that, being a financial professional, I do have to deal with. So let me go ahead and turn this music off, actually, because I want to get to it. Let's go. All right. So making your home debt-free is a mortgage acceleration review. Now, this is a whole article, but the main portion is the mortgage acceleration plan. Now, what I used to call it, before I got introduced to these other people who wrote articles about what I do, is I used to call it my mortgage asset plan, but they call it their mortgage acceleration plan. And the main portion of it is using life insurance values to pay off your mortgage early. Okay. Now, I want to talk to you actually about a couple of different ways with which you can pay your mortgage off early. So using life insurance isn't the only way that you can pay off your mortgage early. Okay, so let's take a look at what they say here. Without a mortgage plan, Or let's take a look. It says potential mortgage action plan solution. Without a mortgage, very few of us could afford to purchase our own homes. With a mortgage, however, we can enjoy all the pleasures of home ownership while paying for our homes over a number of years. But a mortgage costs a lot of money. Actually, let me share this screen with y'all too, because it's easier to read it on one screen. Share screen. Where is it? Here we go. Share. Okay, so as you see, it says the potential mortgage asset plan. So it says, but a mortgage costs a lot of money, adding thousands of dollars in interest charges to the costs of your home over the term of the mortgage. Now, here we do know the fact that when you have a mortgage, part of having a mortgage isn't just paying the principal. You realize that you pay your interest, and you pay your interest up front. I may need to pull out something called a amortization schedule. This is what I do because I can show you multitudes of concepts to use life insurance to pay off your house early. But one of those concepts is what they're talking about here, which is just a regular cash value life insurance policy. But again, it has to be set up the proper way by a financial professional who knows how to do this, because there's different things and triggers and bells and whistles. Just like when you get a Mercedes Benz, if you get an A class, it's different from a C class. But even if you get a C class, it's still different than if you get it upgraded to the AMG kit. So there's different costs and different bells and whistles in that simple life policy. So with a mortgage acceleration plan, you may be able to save thousands of dollars in interest costs, achieve full ownership of your home in fewer years, and when the mortgage is fully paid, create an investment opportunity with the funds that would have otherwise gone to pay mortgage interest. Lastly, you can enjoy sooner the satisfaction of owning your home outright. Now, if you look here, what does it say? It says make extra payments directly to your mortgage company. So what do they mean when they say that? Well, one of the ways that you can actually decrease your mortgage is to make one extra payment per year. So once a year, let's say you live in an affordable state and your mortgage is $1,200 a month, which is average in most states in America. I'm thinking New York, your mortgage might be about $5,000, but that's New York. California, San Francisco, San Francisco being the most expensive city in the country, followed by Los Angeles, Washington, D.C., Queens, actually Brooklyn, Queens, and then Manhattan. So 3 of the most expensive places to live in the country are in New York, and 2 are in California. And then Washington, D.C., which is ridiculous. But again, there are so many ways that you can pay off your mortgage, but one payment a year, so one additional payment a year, will knock so much time off of your mortgage. And what it is you're paying off the principal as opposed to just paying off the interest. Most people don't start paying off the principal of their mortgage until they're 20 years in. So for 20 years, yeah, you're paying for a little bit of equity, but what you're really paying is the interest. So you're just paying the money that you owe the bank back, not really getting the ownership or buying the value of the house. Also, your mortgage is going to have points on it. Therefore, when you borrow $500,000 for a house, even though what you paid for it is not what it appraises for, nor is it insured for in replacement costs, I'll show you that in a different video, you also don't get to the value of immediate equity. But let's talk about the positives instead of the negatives. So, making extra payments directly to your mortgage company. You can pay your mortgage off early by making one extra payment each year and specifying that it be applied to the principal. For budgeting purposes, you may find it easier to achieve the same results by making 26 bi-weekly mortgage payments per year instead of the usual 12 monthly payments, if your mortgage company will accept bi-weekly payments. Features of this option that you should evaluate include there may be one-time and or monthly fees associated with a bi-weekly mortgage payment plan. Also, something that I don't think they're going to mention in here is you do have something called a prepayment penalty. So if you pay your mortgage off early, they actually charge you money for that. So you end up having to pay more money. But if you have an emergency or an opportunity, you can only recover the extra funds paid to the mortgage company by selling your home, refinancing, or taking out a second mortgage. Real quick, so most people who purchase a home only end up, most people who purchase a home end up refinancing or selling inside of the first 7 to 10 years of owning a home with a 30-year mortgage. And that's statistics from CPAs. Okay, so where were we now? Once the extra payments are applied to the principal, they cannot be applied to current mortgage payments if you suffer a financial setback. The funds needed to complete your mortgage acceleration plan may not be available if you die or become disabled prior to paying off your mortgage. So what does that say here? Well, hey, listen, what you're doing is you're telling that bank, hey, listen, I guarantee over the next 30 years, based on my credit score, that means nothing. It just means that you are going to get an interest rate and you're leveraging future dollars. For example, if I loan you $100 at a 4% interest rate, you're saying, okay, Alonzo, I will borrow this $100 and leverage that. I got to work to make $104 to pay you back. So you're just leveraging your future work and more dollars that you have to earn to pay me back instead of making your money work for you. But it says here, if you die or become disabled, this bank is not guaranteed those funds. And then a lot of people will look at life insurance and say, fuck it, we'll let the people that gonna bury me. But homeboy, you bought this house to protect and provide for your family. You bought the house so you could be Big Daddy. Like back in the day, Big Daddy died and Big Mama got all the praise in the black family. But Big Daddy, the one who put it down and actually bought that house. And he made sure that we had some way to pay for it. And if you die or become disabled, meaning you get hurt and you can't go back to work and you're fucked up because you can't go back to work, you end up unable to own your home and they will foreclose on that ass. Now, what does this say here? Something I've been saying for years, since I started selling life insurance in 2011, but Negroes don't like to listen until white people tell them. So we're going to let some white people tell y'all this shit now. Use life insurance values to pay your mortgage off early. This is Mortgage Acceleration Plan Option 2. Use life insurance values to pay your mortgage off early. Instead of making extra payments to your mortgage company, $1,200 a year or $100 a month in a life insurance policy, consider purchasing a cash value life insurance policy. You own and maintain total control of the life insurance policy. Time out, because I've sent quotes to a few brothers. I sent the quote to a brother who said he was making some money exchanging Forex. So I sent him a single premium quote, and I said, yo, bro, since you like me, you know we got money. Here's a quote, single premium, $25,000. He responded, oh, nah, man, I'm not interested. I like total control, which meant when I sent him that illustration, he had no fucking clue what he was looking at. But instead of having the balls to say, brother, I don't know what I'm looking at, and since you are actually the professional in this, I'm going to speak to you, because a lot of people will say this financial shit, oh, the license is fuck all. Niggas, when's the last time you went to your homeboy who didn't have a license, who wasn't a licensed barber to cut your hair? So stop diminishing what the fuck a licensed financial professional does. Yes, you can trade on E-Trade. That does not, on Stash, on Robinhood, on Acorn. That does not make you an accredited investor. An accredited investor is one who has a risk tolerance of more than $10,000, meaning investor, if you give me $10,000 and it is gone tomorrow, are you able to shrug it off? Or are you going to want to commit a homicide? 10 times out of the 10, most of the Negroes that I spoke to are going to want to commit a homicide. So they don't have the risk tolerance to actually invest. So you need to use safe financial vehicles such as this. Okay? Because again, prime example, if you are going for a credit card, that 20% that you paying back to that's guaranteed. You guaranteed to have to pay them back. You ain't guaranteed shit in the stock market. But with a life insurance policy, you're guaranteed growth. Like a life insurance policy that is attached to the also wonderful S&P 500 that a lot of people who are investing in Tesla are happy that the Tesla stock is on the S&P 500, yet still bafflingly look negatively at a life insurance policy that is attached to the entire S&P 500, something that Tesla just got on. But let's see. If you die before your mortgage is fully paid, the policy's death benefit can be used by your family to pay off the mortgage, assuming sufficient life insurance is in force at your death. Alternatively, the policy's cash value may be sufficient in the future to retire your mortgage early through a policy loan, withdrawal, or policy surrender. So I want you to know that each one of those is a separate thing. And most of the time we get taught about this, the policy loan. And then the thing that they teach you about the policy loan is that you can borrow against your policy, and that's about it. But there are a multitude of things that you can do with your policy because it's a bank. It's literally a bank account. Now, don't sue me for saying that because technically that's illegal for me to tell you. So disclaimer is that I'm telling you technically it can be used as a bank account, but it has to be set up the proper way. So don't just go to your run-of-the-mill agent and say, hey, you got to deal with somebody who deals with advanced concepts. But a policy loan needs to be paid back at 7%. No matter the company, it's going to be a 7% interest rate that you are paying back to the insurance company for your policy loan. The next thing about a policy loan is you do not have to pay it back. That 7%, that is to help the insurance company to reinvest your dollars and help you catch up in your cash value. So the only thing that you not paying that loan back does is decrease your, it does two things. It does lower your cash value, accessibility. For example, let's say you have 10,000 of cash value and you take out 5,000. Now you have 5,000 of cash value left, so that's why you pay back the loan. But you don't have to pay that back. You can just let the cash value continue to build the way it's going to build. It'll be 5,000 less, but you don't have to pay the loan back. All you have to do is when you die, instead of it being a $100,000 death benefit, it would be a $95,000 death benefit because technically you still owed them 5,000 or you owed yourself 5,000. There's a way around that too with an option B, which is an increasing death benefit, which again is another bell and whistle. That would be like getting another AMG package. But I digress. As you can tell, I like Mercedes Benzes. You can also take a policy withdrawal. Now, what is a policy withdrawal? That is, again, where you are accessing the monies from the policy. And when you are taking those monies from the policy, it is a withdrawal, meaning that you will pay taxes on it. But you're taking it as income and you're literally not borrowing it, but you're extracting, withdrawing it like you would from your 401k. I did put the link in the chat. So if anybody does have a question they want to ask and they don't want to type it, feel free to come up and ask. Generally, the reason I don't do too many lives is because a lot of this is personal information and people don't like to give out sensitive information. So you can also do what's called a policy surrender. So what a policy surrender is generally I tell people not to do a surrender until the life insurance policy is paying you for having life insurance, which I'll do another live showing how generally within 20 years, anybody at any age who gets a life insurance policy is being paid for having life insurance. But as we go on, so now we are here and we are looking at a policy surrender. So what a policy surrender is you are canceling or giving up that policy and getting all the money out of that policy. Now, here's the thing. It's tricky because when you do that, again, you're triggering a taxable event. So they are going to give you a 1099 at the end of the year, and you're going to have to pay taxes on those monies unless you do one of a few things. In real estate, they call it a 1031 exchange, where if you sell a piece of property, you then take that money and instead of paying the taxes on that piece of property, you roll it over to a piece of property of equal or lesser value. And then you pay either less taxes or no taxes on all the money that you made off of the sale of that real estate. But with an insurance policy, you can do the same thing. You can do a 1035 exchange or roll that money into another insurance policy or another investment vehicle, such as a retirement account, an IRA, an SEP, a 529. There's so many different options you have, but that is a policy surrender. And when you surrender the policy no longer lives on. You're canceling it. However, with a withdrawal, you still have the policy. And with a loan, you still have the policy. So you still are obligated to pay those monthly premiums, the regular monthly premiums, though you don't have to pay back the loan. But you do not have the policy at all when you surrender it. So you're canceling it. So now it also says, if not used to pay your mortgage off early, you have the flexibility to borrow or withdraw funds from the policy's cash value in the event of an emergency, business opportunity, or for other needs, such as college education funding or retirement. So damn, wait, this life insurance policy can not only pay off my house in the event of a death or disability, because if I get disabled and can't work, there's living benefits in the policy, so I can access cash from the policy. And if I live, wait, you mean I can retire with a life insurance policy? I'll show you how to fund your retirement in another video. Again, you have to deal with an agent who has the ability to work with advanced concepts. It also says if you become disabled and the policy has the waiver of premium benefit, I'm sorry, I jumped the gun. The policy remains in effect as though you were paying the premiums. Lastly, the policy's cash value accumulates tax deferred. So we're talking about all of these benefits that we supposedly want. I want tax benefits. I want good credit. I want this, but I don't want life insurance. Well, what the fuck are we doing, people? Do we really want money, or do we want the fancy instruments they talk about? Because the fancy instruments they talk about are things like a money market account. A money market account would be a high interest or a high yield bank account, a high yield savings account, high yield APR. As of today, the highest yield APR bank account is American Express with a 1.67% APR. What that means is for every $1,000 you keep in that bank account, it takes 1 year to earn $167. So that means that today on December 5th, you put $1,000 into that bank account. You, D-Money Magic, what up? Hop on the stream, but I'll tell you why people don't want life insurance. But what that means is that same $1,000 that you put into that bank account December 5th, 2020, you need to wait until December 6th, 2021 for it to be worth $1,167. On the flip side, life insurance on a worst case scenario, which would be the economy we have now, grows at a compound interest rate. So everybody's familiar with credit cards. Compounds means on top of each other month to month, interest rate of 2%. So on that same note, that means that if you put $1,000 into a life insurance policy December 5th, 2020, January 6, 2021, that life insurance policy now has $1,200 of accumulation. Would you rather gain $200 a month or $167 a year? I know it's a rhetorical question. Everybody always goes, well, $200 a month. Then I say, okay, let's sit down and have a life insurance appointment. Well, I want to think about it. What the fuck do you want to think about? How broke you are, or how broke you're going to be when you thought about it for 20 years and didn't fucking move? Right? Excuse my language, YouTube. I know y'all cracking down on folks. Now, if you'll notice here, also it says, withdrawals and loans will reduce the policy's death benefit and cash value available for use. I'm sorry, I told you that earlier. Policy surrender will result in the loss of life insurance protection. Any policy guarantees are subject to the claims paying ability of the issuing insurance company. And then there is the mortgage acceleration plan checklist. And it says the analysis: decide how many years you would like to pay off your mortgage. Determine the mortgage balance for the year in which you wish to pay off your mortgage. To implement a life insurance plan, select the type of cash value life insurance plan you wish to purchase. Before purchasing a variable life insurance policy, carefully review the contract and underlying fund prospectuses, which contain information relating to investment objectives, risk charges, and expenses. Oh yeah, I forgot to tell y'all, life insurance is an investment product. It's just only one type of life insurance policy is an investment, and that is variable life insurance, which is tied to the S&P 500. That's not a problem, Roger. I definitely don't mind you listening. I'm trying to just do this for a brief moment because I know Big Discussion 76 is about to have his sports thing going on, and I'm into sports too. I'm a really big football fan. Go Patriots. So I want to show this though, because D-Money Magic asked a very important question. Why don't people want life insurance? And that's actually very easy to answer after many years of experience. A lot of it is the marketing of it, and it's taught to be a death benefit, not the life concepts of it. Number two, but mainly it's you don't want to think about your mortality, right? And when you think about life insurance, we tend to think immediately about death, because what do we think about? Yeah, well, it's almost like the mobster. Hey, you got a nice family. Be ashamed if something happened to them. You know what I mean? It's like, it's really kind of nerve-wracking if you think about it. So a lot of people don't want to buy life insurance because they don't want to have that conversation or think about their own death or their own mortality. But you're also cutting off your nose to spite your face because you're not thinking about your own legacy or the lasting impressions you can leave on a future generation, or just things like your last name. Like, we know that JP Morgan Chase is the person, JP Morgan Chase, and the company JP Morgan Chase are related to the person Morgan Stanley and the company Morgan Stanley, because the person who started Morgan Stanley was the grandson of the JP Morgan of JP Morgan Chase Bank. Reverse psychology into not investing. Yes. So, again, that's why you see things like prospectuses. If you have ever invested in a mutual fund, or if you have ever been an accredited investor, which, since I'm on now, I'm just going to keep going and talk about being an accredited investor. If you are an accredited investor, you've seen a prospectus. If you've purchased a mutual fund, you've seen a prospectus. If you've purchased variable life insurance, you've seen a prospectus. Now, it also says here, design the life insurance policy such that it will produce sufficient cash value to retire your mortgage in the desired year or pay off your mortgage if you die prematurely, assuming required premiums are paid when due. You'll also need to establish insurability. I was on a Zoom call giving some mentorship yesterday. And I explained to, and it was a group of Black people, and I had to explain to these young folks, yo, we got to stop playing. We got to be right and exact. They didn't understand if you have a felony, and this is specifically to the Black men, if you have a felony, you cannot get life insurance. Now, there are some caveats to that. Okay. What are the caveats? You have to be removed at least 10 years from the felony in order to possibly qualify, because it depends on the company. Now, when I say remove from 10 years from that felony, salute, Ra, that does not mean that you got locked up in 2002 and came home in 2012 and that's it. No, what it means is when you are off papers. So whenever you're off papers or off of parole or probation, which usually once you do a dime in jail, or if you do a full calendar or full clip, you then, well, a full clip is 1 calendar year, 12 months. If you then are off of papers, you can wait that additional 10 years. Now, let's think about this. 10 years, then you come out, you're trying to be a responsible Black man in society. It's already hard to get a job. And then let's say you have a baby mama who's being irresponsible, so you want to be responsible. You put yourself on child support and you get a life insurance policy to give to the courts so you show that you're being even further responsible. But yet you can't even attempt to do that because shit like the Joe Biden crime bill locked you up when you was out doing something innocent as doorbell ditching when you was 13. Then they locked you up, caught you up with a felony. You're 23, 33, 43 before you can even look at getting an insurance policy. And life insurance is not paid for with money. It's paid for with your health. I'll give you an example. A year ago, after Nipsey Hussle died, a friend of mine came to me to buy a life insurance policy. He bought $750,000, $750K. That policy, when I quoted him, was $120 a month. However, life insurance, again, like I said, is paid for by your health. So once he did his APS and his paramed exam, which is they come and take blood and urine, and they took his medical records from his doctor, they did what's called downrate him. So they said, sir, you're healthier than the average man. He's a vegan. He eats right. So this brother, and he actually screams on me because he says he ain't going to listen to me till I get my health right, and then he'll get his wealth right. He said I'm too valuable to be sick. But he then, that policy went from $120 a month to $90 a month. So they said you have two options. You can get the same $750,000 for $30 a month less, or we can increase the amount of coverage and, you'll pay a few dollars more. You still won't be ending up paying $120 a month, or you can increase it to that $120 a month. Now look at that. Being healthy decreased the price of his life insurance. So it's an intertwined game that they're playing. And there's multiple avenues that you can protect yourself. So I have another question here. It says, what if people get one before a felony? Does it stay active or is it rendered null? That's a great question. Well, it depends. So there's a few, actually, I'm going to leave that question up so people can see that I'm answering. So that really depends, D-Money Magic. And what that depends on is, well, obviously you're assuming that they're not dying in the commission of that felony. If you are to die in the commission of a felony, your life insurance is null and void. very similar to if you are to die in an act of war. For example, 9/11, the people who died in 9/11, life insurance policies did not pay out because President George W. Bush, my nigga, said that it was declared an act of war. So the same happens with a felony. If you are dying in the commission of a felony, your life insurance policy will not pay out. Now, I would find a strong attorney to argue against that in current situations where Black men are being murdered unarmed because they're not exactly in the commission of a felony, even if they are a suspect. And a good litigator such as Johnny Cochran or the Cochran firm would basically say, if the glove don't fit, you must acquit, and we would have a bunch of rich Black men. So if Black men would get a bunch of high value life insurance policies, Warren Buffett said it himself, but he has enough money to cover it. If Black men would get high face amount life insurance policies, owners of these companies would stop the cops from killing you because we'd be giving Negroes too much money. But if you have the policy and you get locked up, as long as the premiums are being paid, that policy is in force. So no, it doesn't nullify the policy once you get the felony, as long as you don't die in the commission of a felony. So again, you do want to establish insurability, and you want to arrange for the payment of premiums. Okay, everybody, I want you to stop looking at life insurance as a bill, and I want you to start looking at it as an asset, right? Because like I said, you're sitting here looking at it as a bill, but it grows at 2% a month, while your bank grows at, well, if you're in an average bank account, not a high yield bank account, then your bank account is growing at 0.075% interest. So what that means is for every $1,000 you put in Chase Bank today, December 5th, 2020, that $1,000 has to wait until December 6th, 2021 to become $1,075 versus 1 month to become $1,200. So let's realize that we have something here. We have more than enough to do it. It's crazy that we don't do it. Well, no, it's not that crazy that we don't do it, D-Money, and I'll tell you why. Again, it's marketing, right? There's very few here. So here's the thing, right? On my personal Facebook, I get banned a lot, and obviously in the field I work in, being in the manosphere, it's difficult because speaking what I speak, I'm putting myself at risk, right? All the more reason to pool our own resources. This is true. But I don't really care about putting myself at risk because of the experiences that I've had and realizing that there are our resources. Prime example, there's a life insurance company that's Black owned called North Carolina Mutual. However, they're going into rehab right now, which is bankruptcy. So I called them to try and be a producer for them so I could sell their product, but they won't even let me sell their product because they're going bankrupt. On the flip side, there is an insurance company that was recently purchased by one Magic Johnson by the name of Equitrust, and he purchased that company for $17 billion. So they're out there. I'm working on getting with him as well. Also, I'm working on, if anybody wants to donate to my GoFundMe, or I'll throw up my Cash App. The cost of the course is $3,500. But I am going for my WMCP, which is Wealth Management Certified Professional designation. It'll just kind of help me stand out in terms of the field. So when people like yourself are looking for a financial professional, it helps someone like myself stand out, so you can click on my link and say, hey, maybe this is the guy I need to work with. He actually does work with alternative concepts. He's not just going to sell me a $50,000 life insurance policy and move on. Prime example, I was talking again to someone about the rule of 20, which is if life insurance policy should leave 20 years of your income. So if you're an average man in America and you make $50,000 a year, you need a $1 million life insurance policy if you have children. Or if you don't and you want to have children, $1 million is $50,000 a year for 20 years. That's all it is. So in songs like Rap Niggas by Nipsey Hussle, where he says, I ain't nothing like these other rap niggas, $1 million life insurance on my flesh, nigga. When you've spent $1 million on cars in 1 year, and you're leaving Lauren London and that beautiful baby with $1 million in life insurance, yet you're a man of such means, you left them $50,000 a year for 20 years, Brody. Stop putting money phones to your ear and put money in the industry. This is why Black women say they're not protected. It's not because we won't go smack the shit out to somebody. It's because we don't own industries. As Black men, we seem to not want to be fucking competitive. And I'm tired of it. And I'm talking about competitive against other men. We should be crushing other men. But I keep hearing this bullshit of white supremacy, which doesn't exist. Let me explain to you. I am a Black supremacist. Do you know what a supremacist does? A supremacist wants his competition at their best, or they want his competition with an advantage against him. So when he dominates them, as Black men tend to do in every industry that we enter, you can show your true superiority. Put a 1 in the chat if you fucking agree. I'll wait. Okay, so we don't have any other Black supremacists right here. That's all right. I'll stand on my own too with that. But what's going on, BMBBH? So as I continue here, I'm sorry, I went off on a little tangent, and I tend to do that because I'm passionate. But it says here, you can manage your finances. It's by managing your finances that you write the story of your life. You are both the author and the story's principal character. Resolve to perform what you ought. Benjamin Franklin. And then there's other, this is important information. This is legal information. Actually, I'll read it. So it says, ironically enough, this is from my brokerage. I didn't even realize this was one of ours. The information, general principles, and conclusions presented in this report are subject to local, state, and federal laws and regulations, court cases, and any revisions of the same. While every care has been taken in the preparation of this report, VSA LP is not engaged in providing legal, accounting, financial, or other professional services. This report should not be used as a substitute for the professional advice of an attorney, accountant, or other qualified professional. Life insurance contracts contain exclusions, limitations, reductions of benefits and terms for keeping them in force. All contract guarantees are based on the claims paying ability of the issuing insurance company. Consult with your licensed financial representative on how specific life insurance contracts may work for you in your particular situation. Your licensed financial representative will also provide you with the costs and complete details about specific life insurance contracts recommended to meet your specific needs and financial objectives. Before purchasing a variable life insurance policy, carefully consider the contract and the underlying funds, investment objectives, risks, charges, and expenses. Both the contract prospectus and the underlying fund prospectuses contain information relating to investment objectives, risks, charges, and expenses, as well as other important information. The prospectuses are available from your licensed financial representative or the insurance company. You should read them carefully before purchasing a variable annuity. U.S. Treasury Circular 230 may require us to advise you that any tax information provided in this document is not intended or written to be used and cannot be used by any taxpayer for the purpose of avoiding penalties that may be imposed on the taxpayer by any taxpayer for the purpose of avoiding penalties that may be imposed on that taxpayer. The tax information was written to support the promotion or marketing of the transaction or matters addressed, and you should seek advice based on your particular circumstances from an independent tax advisor. The reason I read that, again, like I said, I have been sued, and I would like no one to sue me again. let me take a look at some of the comments here real quick, see what anybody's saying. Oh shit, it looks like we do have a bunch of black supremacists in here. I guess my chat is moving slow. Someone's driving. Look at young Pharaoh, tries to open his own bank. Actually, there's a CPA friend of mine from New York who wants to, so I should actually sit back and tell you all some of the plans that I have, especially here in the Black manosphere, because one of my complaints about the Black manosphere was it tended to sound like a bunch of men crying about women. Fuck them hoes. Let's build, right? So in building, since I'm tired of hearing about it, I'm gonna do something about it, and I'm gonna start creating content in building. So gentlemen who want to build, y'all can come over here and we can build. Yes, I'm still gonna go over places and hear about women, because recently my heart has been broken by my own family and seeing that I got to leave Raccoon City and I can't save the black women like I thought I could. And let me tell you, it's ripping my heart to shreds from many women in my family. But I'm noticing that I gotta walk away from these, bro. I'm not gonna go ahead and do that because, again, this is my real persona here, and I don't need my family's business out there like that. But especially, so we can come together and build a credit union. So black-owned banks, that is very possible. One of the things we can do, like I said, Morgan Stanley does promote Carver Federal Credit Union, which is a black credit union. I also belong to a Facebook group with a gentleman by the name of AJ Hector, who supports black-owned banks. And there are a list of black-owned banks that we can go ahead and get up there. So it says, especially if you're in insurance, I'm imagining he probably needs help in that area. Yeah, insurance is a difficult area, man. And it pisses me off because in my field, you should see the disrespect that blacks get, even from other black agents. Like I said, I talk my Republican shit, right? But you should see these Democrats. Man, I have an advisor friend that I work with who works with rappers specifically. I tend to go to things like the NBA draft. I've not gotten, I haven't gotten anybody who has even gotten to play in Europe or even in the minor leagues. All the guys that I've signed up so far have ended up, back in regular life, but there's only like 3,000 spots in the NBA. So, but he's like, yo, man, these rappers, they suck, man. They live paycheck to paycheck, but I'm taking pictures with all of them. And I'm like, man, you talk worse about black people than I do, or, all the kinds of coons you call me for being right-leaning, even though I'm a registered independent. But then let's go back to these life policies. So again, you can't get a policy with a felony unless you're off papers. But I read all this because, as you can see, there's tax implications. There are investment implications. There's a whole bunch of stuff. So, I really want to be able to, as I grow, share with you gentlemen more. So what I'm going to ask is that in terms of this financial world, I want to ask that y'all share with me some what the fuck is it that's bothering us, to tell me so I can, from my angle, try to help me help you. So one of the things I hear is child support, and I'm not complaining about it. I have a friend, again, in the state of New York, who had his baby's mama who was going to take his son out of that state. And I sold him a life insurance policy. And then I said, bring that to the courthouse and show that you're getting a life insurance policy and you're going to make your son the beneficiary. Now, I advise against making a minor the beneficiary. It's not a good idea to do because they're under the age of majority. So what would happen in that situation is let's say you're making your son the beneficiary. Your baby mom, I'm going to do a whole title on that. I'm going to do a whole fucking video on that. But your baby mother would end up with the funds if you died before your son became age of majority, which is 18. Because you didn't have it in an irrevocable trust. So what you do is you write that life insurance policy, and that policy then goes to the behest of the trust. The trust will read that your son is the beneficiary. But you also need to not only just do a trust, you need to do an irrevocable trust, meaning that the person who the trust is named to has to sign it in order for it to be changed. Now, I did hear where some dirty broad actually did that and made her sons sign their trust over to her, and then she took all the money. But it takes us men to at least be some kind of an influence in our child's life. Now, I hired an agent some time ago, a young lady from Missouri, and I was speaking to her about, she was talking about her sperm donor is what they call us, and so, my brother-in-law calls them his egg donor, because he's done more for his children than she did, but, custody. But ask about being there or paying for anything or rearing or giving knowledge or, well, let me tell you something, D-Money Magic. Life insurance pays dividends. So that's what I'm saying. Life insurance covers just about every area of every investment vehicle you can think about. Just think about it, okay? A life insurance company, most life insurance companies have been in existence over 120 years. For example, they're out since like 1780. So they are financial companies because they do offer all the investments you talk about, but we start by building your financial foundation. Just like if I was going to build a house, I start building the house with the concrete in the ground, not with the roof, right? But everybody in the Black America has been taught, start with the roof, start with the investment, start with the stuff that sounds like bells and whistles. And you haven't dug a hole in the ground and poured concrete to start a foundation, which is the life insurance. So what the fuck is your financial house sitting on, people? So really quickly, I think what I'm going to do is, since I have it up and I have a few good eyes up here, I want to show y'all something. Again, this is real numbers, right? And I like to show real numbers because I'll be honest, this one I show, and I keep his name up there because it's a buddy of mine, and he was like, yo, I didn't know that my ish was like this. So if you ever want to use me as an example, you can. So we're going to do that right quick. Hold on. How do I share this? Oh, hold on. Just so you know, family, I do have on the blue blazer. It's like that. Oh, you see my little calendar in the back. This is my wife's office, y'all, just so y'all know. So I'm usurping her digs for the day. My office is in my living room. I figured I'd give her the office because she keeps other people's sensitive information. So now I'm gonna hop off and share this screen with y'all. Right, it was disappointing, but it was an accident. I can't blame the brothers because I found out after that the link was broken. So that may be my fault. So I do take accountability for that. Because I was unaware that the link was not proper. So I can't be mad at you for not showing up and, the link's not right. So what I want to show y'all here is this. So this gentleman is a self-employed property manager. I don't know why this. So 400,000. Okay. So this guy is a property manager in Houston, Texas. He owns real estate, very similar to my man who owns True Kitchen, Kevin Kelly, correct? So this is a gentleman of means. So black men, I want to show y'all something real quick. Is this screen large enough? Can y'all see this very large? Let me go ahead and see. Put a 1 in the chat if y'all can see it good. Or if I need to increase the visibility. He says, Alonzo, you gave that link early a few weeks ago. We should have been deep in there. I feel you. Yeah, she was in there. Sheed, you may be entered. Well, Sheed, since you were there, you're actually entered Amrod. Just so y'all know, everybody was there to be able to get entered into the raffle for the book from Quentin. So if you saw what Quentin was talking about, he definitely is. I'm definitely gonna get with him, but he is giving away. We're giving away 10 books, so y'all are in the raffle. So I'm gonna push Charles to try and force at least one of y'all to get one of them raffles, so we can send y'all his book. But black man, if y'all notice, this says a couple of things right here that we seem to hear everywhere. Now, this particular thing is a fact finder, or a what I call a life identifier, because a life insurance agent is supposed to sit down with you and identify and protect your lifestyle. So if you'll notice here, two of the words that it says are protect and provide are the very first things that are set up there, are protect and provide. Protect and provide. So again, black men, part of the reason that we can't cry about stuff is because we ask for these things like titles, like the moniker boss, king, or HNIC. So if we are going to be the boss, the king, or the HNIC, right? If I'm gonna be the head nigga in charge, then there are some things that I can't complain about, and there are some things that I have to do. I do have to protect and provide. If I have a woman who works, just like Roger Report says, she does need to turn that check over to me. But I need to give her something to be confident in giving that check over to me. And part of that is taking care of what needs to be taken care of by protecting and providing. As you'll see here, it says, I want you to rate from high, medium, low to none. Protecting your family's lifestyle, protecting your income, providing education funds. That means leaving a legacy for the future because you're making sure that your kids are educated. Implementing. So these are all action words because we are what? Men of action. Correct? So a man of action is that takes action. Oh, by the way, I hope y'all like my fit. I got the little, the blue Michael Kors tie, the pink and white shirt, and then the blue blazer. But I ain't pink pill or blue pill. I'm no pill. Just wanted to throw that in there. So you're implementing. These are all action words. And as men, we are men of action. So notice here, it's generally when I do these sits, I hate the fact that I tend to end up having to sit with the wives because I want to sit with the husbands because the husbands need to be doing this shit because the husbands are the one who provide the family. If anybody in there is married, you know that your name is Mr. Blank and your wife is Mr.'s Blank, MRS. So again, when we look at these things, we have to realize, bro, that woman belongs to you. You own her ass. But in ownership, you better be ready to be a proper owner. So there's some things that you have to do to make sure that you're stepped up and that you are right and exact. Now, there's something that I learned in the fraternity that I belong to. If any of y'all men are out there, you got a spider on your shoulder, SMIB. One of the things they say is wipe. Work in progress every day. You should strive today to be better than you were yesterday. You should strive today to do something for someone who can do nothing for you. And if you do that every day, you will become a better man every single day. So the name of the game is to outdo what I did yesterday. So you're always in competition. So we are always in competition with ourselves and being our best selves, our ultimate selves. But look, providing education funds, implementing a savings plan, planning for retirement. So we're planning for the future. And remember, I'm a life insurance agent. Now, I've had securities licenses, but I got rid of all the licenses that could lose you money and kept the licenses that can guarantee from the day you put $1 into that investment, it increases. Name any other investment. Dude, go tell Tesla to guarantee the day you put $1 into them that it increases. Bet you they won't when you look at that prospectus or they test your risk tolerance or you look at that red herring. You probably are not familiar with red herring. That's hedge fund talk. That's actually not mutual fund talk. So let me pull that back, because a hedge fund is a whole nother story. Hedge funds are not regulated. I actually intend to manage a black hedge fund in years to come. But right now, in my 30s on Wall Street, I'm considered to have milk, still be wet behind the ears. I'm considered too young to actually work on Wall Street in a heavy scale. Prime example, Warren Buffett is like 809 years old. A lot of the guys who start shit, the average millionaire ain't till 52. So, you know, unfortunately, Wall Street still looks at me as a baby. And the guys who really move and shake things are not really willing to let someone as young as me in yet. But I'm going to fight them motherfuckers and get up in there. So doing things like this, we going to do it. And black people going to be the way to do that. Here are some more legal jargon again. But what I want to show you here is this brother got $150,000 annual income. And his business is $250,000, which means that he has a $400,000 annual income to protect from his business. Now, how did I come to that calculation? Well, if you sit down with your average accountant or your average, tax advisor, they'll tell you the same thing. 150 plus 250 is 400. If he has a business with which he is paying himself a salary of $150,000 annually, and his business is still reporting an income generated of $250,000, then that would equate to an overall revenue or income for the business of $400,000. So when you're looking at business income, you have to calculate it a little bit differently. Okay. So this man has $180K in investments. Okay. Now, again, we're talking about men of means. Okay. And the reason I do this is because he should be set. He should be fine, right? He's got $1.5 million in real estate. So his total assets right now are $1.78 million. We didn't do his personal property. Such things such as jewelry, art, cars, personal property. But we didn't discuss any of that. Now, we went to his liabilities. Luckily, this man has been knocking things out, so he lowered his liabilities a lot. And that's basically due to the fact that his real estate in Texas, I guess right now, Houston is an area that is exploding. Again, we have the True Kitchen and cocktails that, is big. Now, they did misconstrue that story in Houston. Kevin, I was watching you last night where you read, he cursed at them. I'm cursing at y'all right now. I'm like, what the fuck is wrong with y'all? Why don't y'all have more life insurance and nobody's crying? You're like, damn, that's a good point. You see what I'm saying? So let's just look at how we carry ourselves. So he has $50,000 in installment loans. He's down to $400,000 in mortgages. He has only $60,000 in credit card debt. So his total liabilities are $510,000, and he has a systemic monthly savings of $3,000 a month. Now, Jose here has a life insurance policy with American Family that he got in the year 2000. And it's a $360,000 policy that he pays $300 a year for. Immediately, a financial professional will tell you that's a term policy, which it is. I said, how long of a policy is it? He said, it's a 20-year term. What does that mean when he bought the policy in 2000 and it's 2020 and it's a term? That means that policy is going to end soon, correct? So now there's a couple of things. Well, yes, he can renew it. But with a term policy, when you renew it, for example, his policy face amount was what here? It is $360,000. So if we just go his liabilities minus the $360,000, hold on, let me pull up a calculator really quick. So let's see, we have 510 minus 360. So he's still leaving himself one of his year's annual salary to fuck himself up, basically. But if he dies, that business crumbles because there's no money and no business continuation plan or no exit strategy like a buy-sell agreement, which is a life insurance policy that business owners use for exit strategies. I'll do a video on that too. I've got like a year's worth of concepts on or a year's worth of content on concepts. That's $150, $150,000 that he's leaving exposed. And now that's actually that $510,000 that he's leaving exposed. So his annual income, because let's look at what's liquid, right? Because you know when you die, his assets is 1.78 million, or his net worth. Now, if we add his life insurance to that, because your life insurance is a calculation into your net worth. So let's add up his net worth, 1.78 million. So I'll just do 1780 plus 360. So technically his net worth is $2.14 million, right? If you add the life insurance as well as his other assets, right? Now, let's subtract his liabilities, 510K. So his total net worth is $1.63 million. Okay, so you've got a net worth of $1.63 million and an income in perpetuity of 400K from the business. And he started the business to, I'm assuming, provide and protect his family. And then he dies. So his income and his running of the business dies, and he has two daughters who are in college. I didn't show you all that, but he has two daughters who are in college. So he dies. This business is still running on its own? Oh, no, because he ran it. So that's $400,000 that crushes. Wait, those daughters, they're not going to get that $360,000 because it's a 20-year term. And, you know, he's good on life insurance. He already got it. But it's a 20-year term that ends this year, and oh, now it's over with. Or if he decides to renew that $360,000 term at $300 a year, it will be $300 a month now for that same $360,000, and probably less because he's going to have to requalify and do another blood and urine. And now he's 20 years older and 20 years less healthy. So again, you pay for life insurance with your health, but you see how you have to think fast forward with this shit. This is how the white American high school dropout net worth is $10,000. Yet the college-educated, six-figure earning, degree-holding black family household minus depreciable assets, meaning minus the family car, net worth is $1,700. The college-educated black woman's net worth is $5. The non-college educated black man's net worth is $10. So we are worth a dime bag and a nick bag, respectively. So that's why we're throwing that ass in the circle. We ain't worth shit. But then you have gentlemen like Mr. Kevin Kelly, like myself, like Roger Report, like Kevin Samuels, who obviously I'm kind of trying to, you know, get back. Like I said, he called me high value homeless because I ain't making $120,000 a year yet. And then he hung up on me when I tried to get in the show. Then I donated $5 and joined this chat. So fellas, let me get some more commissions, and I'd like to join y'all pages. But in terms of high value type shit, just like we're talking like with these insurance policies, like a man like this who has $100,000 in savings and 180K in investments, why the fuck are you talking to me, a life insurance agent, about how much it costs a month? Nigga, pay this once per year. So let me show you guys a trick, because I also have my PTIN, which means my tax preparer's identification number. So I do taxes as well. I'm also a licensed real estate agent. I also have my life, health, accidental, and property and casualty insurance. So your business liability and your car insurance and your homeowner's insurance and all that shit, and your dog insurance. I do that too, and I've been doing this for a number of years. But I, again, specialize in alternative concepts. So a lot of these things you're not going to hear from your average agent. Now, a lot of you guys have probably heard of Suze Orman or Dave Ramsey or Prime America. All bullshit, who will tell you buy term and invest the rest. And just so you know, Dave Ramsey, one of his largest holdings is a cash value life insurance policy. FYI. And I actually appreciate the buy term and invest the rest model, but it needs to be executed right. And the reality is most people who are buying term and invest the rest can't even afford or qualify for a true investment. When they tell you to invest the rest, they're telling you to invest in a mutual fund or an ETF. They're not telling you to invest in corporate stock because you cannot qualify to invest in corporate stock unless you are an accredited investor. What an accredited investor is someone who has, and they've raised it, it's actually now 250, who has an annual salary of 250. Well, let's use 150 because Kevin Samuels called me high value homeless, not making $150,000 a year. But it's $150,000 a year for the previous 3 years, and you are going to make $150,000 or more for this year. Then you are an accredited investor and you can invest with a stockbroker. That's one way of being an accredited investor. The second way of being an accredited investor is to own a share of private corporate stock, which usually needs to be sold to you. Generally, nobody's going to sell you one share of corporate or private stock unless they own it. Prime example, my mother-in-law, whom worked for Morgan Stanley, sold me a share of Coke, the company, so that I could have corporate stock and become an accredited investor. The third way that you can become an accredited investor is to have a net worth of $1 million or more, excluding any owned real estate. Meaning if you own this guy right here is not an accredited investor because his $1 million net worth is only because he has real estate. So his investments are probably with Fidelity or some other company that sounds like they're a real investment company, but they're not really investing. Well, they are, but they're doing ETFs or mutual funds, which is a boatload of shares bunched together. For example, I use the application called Stash. I have an ETF called Young Money. It contains Intuit. It contains Facebook. It contains Disney. It contains Berkshire Hathaway. I own a portion of all those shares, all those stocks in that one ETF stock. So I really ain't going to talk too much more of this investment stuff because I got to start charging y'all money and ain't nobody cash at me yet. But in terms of insurance, even crypto, I'm up on all that shit. I don't talk it because the people who talk it to y'all are really selling y'all fluff and bullshit. And again, I have a homeboy by the name of Keeping It 100, Marcus Aurelius, who's in these spaces, who will argue with me and say, listen, those licenses mean fuck all, but will not go to a motherfucking barber who don't have their license. So from y'all seeing the shit that y'all see up here, please respect my fucking craft like you would a doctor or your fucking barber. Okay, so as we go, please do that stream. I was listening to one guy who said, ultimately, you want to build a business profitable enough to sell. Yes, you do want to build a business profitable enough to sell. But again, so this guy is not an accredited investor. He would not be able to invest in the stock market, in corporate stock. He will be able to invest in mutual funds, ETFs, variable insurance, things of that nature. But he's not investing in corporate stock. I'll give you an example. When I was a stockbroker, this was early 2012, I think. One of the things that we were marketing was Green Mountain Coffee, IMAX 3D because the Iron Man movie was coming out, and there was a trilogy movie coming out, something called The Desolation of Smaug. Yeah, we were selling that before the Lord of the Rings trilogy came out, 2 years before it came out. Green Mountain Coffee, we were selling that years before it came out. Metformin, the diabetes drug, we were selling that as a weight loss drug because it still is a weight loss drug. But they were pushing it off as a Now it's a diabetes medicine. But when I was a stockbroker, we were pushing it as a weight loss drug. I've put the link in the comments. So if anybody does want to come on and ask a question, again, I get it. If you don't want to get very specific to your situation, you can go vague, and I can give you, kind of a 30,000-foot view of finances. But in order to give you a real view of this, you got to sit down with me. We got to sit and talk. And then you can't tell me you want to think about it until it's too late. I'll give you another story of someone who thought about it until it was too late. I have a brother-in-law. This brother-in-law of mine was a gentleman who ended up being self-employed. He ended up being a process server. And he ended up with my sister-in-law and her children. And he was a stepfather, and then they had a child of their own. But he would buy sneakers every week, Foamposites. He'd buy the whole family a pair of Foamposites. And I was like, yo, bro, with what you do, it's dangerous work. You might get injured on or off the job. Let me show you a way that you can get taken care of, whether you're injured on or off the job. You can take home at least 60% of your take-home income, which is this, monthly disability insurance. Now, this is a guy who's buying 3 and 4 pairs of Foamposites a week. So you got the bread. Foamposites are like $200. So you're spending like $1,000 a week on sneakers, my dude. And Negroes do it all the time and then tell me they can't afford life insurance. I've been selling this shit for a number of years to crackers and to niggas. And crackers sign them checks easy, which is why I can afford to wear this fucking $100 Michael Kors tie. But I digress. And the only reason I wear this bullshit is because I have to look a certain way to make motherfuckers be like, oh, he looks like he has money, instead of worrying about the content of what's up here. Because all the motherfuckers selling you all that bullshit, Forex, trading all that bullshit, cryptocurrency, all that bullshit, you need licenses for all of them. Forex, you need a Series 3, which is commodities, a Series 4, which is futures. Currencies, they're actual markets. Do any of you who trade Forex know what the NK is? That's a foreign market. That's the Chinese stock market. So let's stop hopping on hot, fancy ass fucking waves that sound like some shit and learn the basics and dig that hole and pour that concrete so that when we hear these black women saying we're not protected, we don't feel offended thinking that it's because we're not physically protecting you in the middle of the street. They're not protected because we're not protected. Why are we not protected? Because people like myself and Dr. T. Hassan Johnson have to put our neck on the line, and we don't have actual foundation institutions that we fucking built so we can say what we need to say. Because if I was a fucking cracker, if I was a fucking Jew, if I was a Spic, if I was a Jap, if I was any of that shit, I could say whatever the fuck I want and not be worried about being banned. But now my channel's probably going to get taken down because I said a bunch of racial slurs. But let me say nigga a few more times and nobody cares. Right? I'm sorry. I'm getting emotional. Let me reel that back in. So, again, this gentleman, my brother-in-law, told me that $65 a month for a disability insurance policy was a waste of money. This gentleman then contracted diabetes like many black men do because we don't eat right, me included. This brother now has water in the back of his eyes or some shit, but I don't know. They said he's legally disabled now because he can't go back to work because he has less than 30% of his vision due to his diabetes. Now, had he had that disability insurance policy for $65 a month that he thought was a waste, he could be receiving 60% of whatever the take-home income he was receiving right now, plus his Social Security disability benefits that he receives from the state until the day he's 67 years old. But $65 a month was a waste of fucking money. You fucking ignorant nigga. Are you serious? But we got all the J's and the golds and $100 fucking ties and $300 blazers and $200 fucking shirts for no fucking reason. God damn it, I'm tired of buying off the rack $600, $700, $800. This shit is not cheap. I had a situation where I worked at a CPA firm. I wore an olive green Michael Kors suit that was $678 off the rack. Plus, I had to go get it tailored to fit me. The black women were clowning me. Nigga, you in the cheap jail suit, da-da-da-da. This Russian girl says, these bitches are crazy. That is Michael Kors. I was like, how the fuck did you know? I can tell by the cut. So, you know, what are we going to do here? Oh, damn, my man's, I'm about to end up having to cut this short because somebody else going live that I like to watch. But while I'm in the groove, I'm going to keep going because the ultimate nature of him doing what he did was to inspire me to do what I did. Just like Tupac said, if I don't change the world, I'm going to spark the brain that does. So let's spark them brains, gentlemen. Do we have any questions, comments, or concerns that I can address real quick in terms of what I just showed you, or in terms of, you know, protecting and providing, or anything on this? Because the next one I do, I'm going to show y'all again, you know, I am saddened that we missed the, that a lot of us unfortunately weren't there. And I guess you do have a point. I did drop that link weeks ago, but I personally tend to think in the type of world that we're in, you know, I hop on the link when I see it right then and there. Otherwise, I forget about it because we have the mentality of goldfish in today's world. So in my opinion, I should have marketed it maybe more. Maybe the day of, I could have gave y'all more links. But I'll tell you what, the people who showed up, I appreciate it. And don't think that that's the last one. We're going to be doing more. My goal is to do more of these. My ultimate goal is, again, to manage a black hedge fund. I want somebody, in fact, that's what I'm going to do. We're about to do that right now. I'm about to Google hedge fund. And what is a hedge fund? Let's do it. Where is Investopedia? So let's see the dictionary. Wow, what the fuck? This just went somewhere else. Okay. Let's go to here we go. Well, this is Wikipedia. Let's go to Investopedia. Investopedia. Damn, why the hell I can't spell hedge fund? Okay, so this is my ultimate goal. How to start a hedge fund. Yeah, you start by having $3 million. But any of my gentlemen out there who are traveling men, like I said, to the glory of the Grand Architect, SMIB, definitely give a brother some help. You know, the wives of widows and all that is out here. And we are looking to add to those 36 private placements. This is a hedge fund list. I don't want the list of hedge funds. I was trying to find out. Okay, they're giving me a list of hedge funds. Hedge fund definition, Investopedia. I don't understand why they give me a list. What is a hedge fund? Hedge funds are alternative investments using pooled funds that employ different strategies to earn active returns or alpha for their investors. Hedge funds may be aggressively managed or make use of derivatives and leverage in both domestic and international markets with the goal of generating high returns in either an absolute sense or over a specified market benchmark. It is important to note that hedge funds are generally only accessible to accredited investors as they require less SEC regulations than other funds. One aspect that has set the hedge fund industry apart is the fact that hedge funds face less regulation than mutual funds and other investment vehicles. Some key takeaway. Hedge funds are actively managed alternative investments that may also utilize non-traditional investment strategies or asset classes. Hedge funds are more expensive compared to conventional investment funds and will often restrict investment to high net worth or other sophisticated investors. For example, what that means is if I start a hedge fund and I open it to you guys can't come in unless you come with $50,000 and you make a commitment to leave that $50,000 for 1 year. Otherwise, get the fuck out my face. And that's what a hedge fund is. So those are some of the rules that are in a hedge fund. So let's go further. The number of hedge funds has had an exceptional growth curve in the last 20 years and has also been associated with several controversies. While the performance of hedge funds as beating the market was lauded in the 1990s and early 2000s, since the financial crisis, many hedge funds have underperformed, especially after fees and taxes. What does that mean? All y'all motherfuckers keep saying, I want to invest here, I want to invest there. Slow down. Insurance is an investment too. And all those gains that you think you're getting while you're investing with Tesla are being eaten up by your fancy broker like me, who's charging you money management fees and 2% of your annual net worth for the fucking fact that you bought Tesla from me 15 years ago. Now Tesla's in the tank and it's losing, and you're still paying me money management fees and 2% of your net worth. But, I'm good on life insurance because it ain't making me no money. I was speaking with a gentleman from the manosphere behind the scenes on this. I showed him a quote and he was like, $1,200 a year and niggas ain't doing this? What the fuck is wrong with niggas? And then he said, oh, I see why they ain't buying life insurance. They think it's slow money. Now I'm going to show you how you can have life insurance. I'm not going to show y'all that in this video, but I'm going to show you how y'all can have life insurance and have it pay you for having it. Damn, I didn't know that, Alonzo. Is the structure set up as trusts? Depends on what structure you're talking about, if you're talking about hedge funds. But let's see. Introduction to hedge funds. I'm probably just going to read this hedge fund thing and then leave it off. And then, again, thanks to Dr. Dunbar, I guess my slot in the manosphere can be 2 o'clock on a Saturday, and let's start getting this 24-hour network. You know what I mean? We're talking about men of action. Byron Allen tried to sue the stations. They won't let him start it, so we'll start it here. Also, someone mentioned Michi X. I used to watch her on Fly Nubian Queens all the time. I did not know that she has her own thing. Also, while we're talking about Black people, I want everybody who has Black children who are homeschooled to homeschool your children with the Ziax Institute. I am in no way affiliated with any of these things except for the fact that they are Black. Ziax Institute is run by a gentleman by the name of Q Butter. Yes, he does have a music studio. Yes, he is a rough exterior. He's a rapper, all that good stuff, but he's about our Black revolution, as am I. Right? You'll see the RBG all up and over out of him. Okay? One of those things is he wants to educate our beautiful Black babies. In fact, I'm going to put in the chat the Ziax Institute.org. They ask a $500 monthly donation, but if you cannot afford that $500 monthly donation while your kid is attending their schooling, no Black child is turned away. One caveat, you have to be Black. You can't be Latin or none of that other shit. Black. When you are a Black child and you attend the school, if your parent cannot afford $1, guess what? You're going to pay like you weigh. You're going to volunteer in some way. You're either going to teach a class or you're going to donate some form of fashion to this school so we can have our own Black people educating our Black children. And there are Black men who are teaching STEM, a lot of engineering to these Black children. So it needs to be supported. There's another school, I can't recall, but it's a brother-in-law to Lord Jamar that is out of Brooklyn. And they also do it. I think it's the Thomas Naismith University or something like that. But these are Black-owned schools, a lot of them based out of Brooklyn, that can help us grow. That has nothing to do. I ain't getting a dime off of that. I ain't getting a dime off of telling y'all this shit, but I'm telling y'all this because I'm tired of us being in a position where I had to be in my 20s. which was to turn into 25 cent, aka the next 50 cent, and get shot 5 times because I wanted to be out there looking like a thug. Because remember, there's something also to that. And 50 Cent said himself, react like a gangster, die like a gangster for acting. Now, let's go back to these hedge fund, retirement annuities and lifetime income. So each hedge fund is, where was I? So each hedge fund is constructed to take advantage of certain identifiable market opportunities. Hedge funds use different investment strategies and thus are often classified to invest according to investment style. There is substantial diversity in risk attributes and investments among styles. Legally, hedge funds are more often set up as private investment limited partnerships that are open to a limited number of accredited investors and require a large initial minimum investment. Investments in hedge funds are illiquid, as they often require investors to keep their money in the hedge fund for at least 1 year at a time, known as the lockup period. Withdrawals may also only happen at certain intervals, such as quarterly or biannually. So the history of the hedge fund. I'm going a little bit long here. I think I'm running on what? I'm running on an hour and a half. Are y'all good? Y'all happy to hear this? Or y'all want me to slow down? Well, you know what? I ain't never heard a brother mad about hearing about money, so I'm going to keep going. If you don't like it, you'll hop off. So the history of the hedge fund. A former writer and sociologist, Alfred Winslow Jones's company, A.W. Jones & Co., launched the first hedge fund in 1949. It was while writing an article about current investment trends for Fortune in 1948 that Jones was inspired to try his hand at managing money. He raised $100,000, including $40,000 out of his own pocket, and set forth to try to minimize the risk in holding long-term stock positions by short selling other stocks. This investing innovation, now referred to as the classic long-short equities model, Jones also employed leverage to enhance returns. In 1952, Jones altered the structure of his investment vehicle, converting it from a general partnership to a limited partnership and adding a 20% incentive fee as compensation for the managing partner. As the first money manager to contribute short selling, as the first money manager to combine short selling, the use of leverage shared risk through a partnership with other investors and a compensation system based on investment performance. Jones earned his place in investing history as the father of the hedge fund. Hedge funds went on to dramatically outperform most mutual funds in the 1960s and gained further popularity when a 1966 article in Fortune highlighted an obscure investment that outperformed every mutual fund on the market by double-digit figures over the previous year and by high double digits over the previous 5 years. However, as hedge fund trends evolved, in an effort to maximize returns, many funds turned away from Jones's strategy, which focused on stock picking coupled with hedging, and chose instead to engage in riskier strategies based on long-term, lost my spot. Give me 1 second there. Strategies based on long-term leverage. These tactics led to heavy losses in 1969 and 1970, followed by a number of hedge fund closures during the bear market. A bear market, if you'll see, like I said, I work directly across from the brass bull. So when they say a bear market, that means it's heavy and it's pulling down the industry. When they say a bull market means that you're hitting you're hitting something by the horns and you're boosting it up. So that's why we like a bull market, because it's bullish. A bear market is the bear is heavy, it grabs on and pulls you down. High-profile money managers deserted the traditional mutual fund industry in droves in the early 1990s, seeking fame and fortune as hedge fund managers. Unfortunately, history repeated itself in the late 1990s and into the early 2000s as a number of high-profile hedge funds, including Robertson's, failed in spectacular fashion. Since that area, give me 1 second, fellas. I got to go get me something to drink because my mouth is dry. I will be right back. In the interim, I am going to entertain y'all for about 30 seconds with some instrumentals that I actually made myself because I keep getting copyright issues with this damned with playing other people's music.
Our goal is to break the power of
I'll be right back.
in America and nothing short of it. We mean to end their profits, imprison their members, and cripple their organizations. Imprison their members and cripple their organizations. Cripple their organizations. Imprison their members.
All right, I apologize for that, gentlemen. I returned. And I'm back at it. So, where were we here? We are on hedge funds. Okay. So, let me scroll up here. Okay. The industry was relatively quiet for more than 2 decades until a 1986 article in Institutional Investor touted the double-digit performance of Julian Robertson's Tiger Fund, with a high-flying hedge fund once again capturing the public's attention. With its stellar performance, investors flocked to an industry that now offered thousands of funds and an ever-increasing array of exotic strategies, including currency trading and derivatives such as futures and options. Now, if you were on earlier, I was explaining to you that a financial professional such as myself is very familiar with things like crypto, things like derivatives, things like futures and options and Forex, because you need those licenses in order to trade or even to do things like have a hedge fund. High-profile money managers deserted the mutual fund. I already read this part, right? In spectacular fashion. Since that era, the hedge funds industry has grown substantially. Today, the hedge fund industry is massive. Total AUM, or assets under management, in the industry are valued at more than $3.2 trillion, according to the 2018 Preqin Global Hedge Fund Report. Based on statistics from research from Barclays Hedge, the total number of assets under management for hedge funds jumped 2,335% between 1997 and 2018. FYI, hedge fund managers tend to get a 1% commission on AUM, or assets under management. For example, one of my favorite hedge fund managers, who was also unfortunately arrested because he did insider trading, which was a Ponzi scheme, is an Indian man by the name of Raj Ratnam. And he had, you can look him up. He's one of my favorite criminals. Raj Ratnam was a cocky insider trader, and he ended up getting knocked for trading. But he was running a hedge fund that none of you have ever heard of, which is funny. When I sell my financial products, people, I ain't never heard of that company. That's how I know you ain't got money, because the people who have money For example, can anyone tell me what PIMCO is? Put a 1 in the chat if you know what PIMCO is. And then I'm going to keep talking about what we're talking about here to let someone put a 1 and put a 2 in the chat if you don't know what PIMCO is, but you'd like to know what PIMCO is. So, as we're going, again, Rajroth Rotnam ran a gang, I can't remember the name, but I think it was Gangplank Galleon, which was a hedge fund that had like $50 billion under asset. And the cool thing is he got 1%, so he got like $500 million a year, and he didn't even do anything to get that money, right? All he did was take some insider trading calls, which there's a lot that can be construed as insider trading. You can talk to the janitor of a financial services firm and that be considered insider trading. So this business has a lot of ins and outs to it. And the reason I propose this business, I intend on starting my own hedge fund and manage my own hedge fund. And like I said, it's going to be a Black-owned hedge fund. So I'm always scouting. But I am looking forward into the future, realizing that I'm going to be in my 50s with this hedge fund. And I try to recruit brothers because, again, I look at that thing called competition that a lot of the Black women say we don't seem to have because we don't seem to be competitive and they go out and swirl and we're not protected because we don't create these industries. But this hedge fund will create massive competition. So I try to recruit brothers, and brothers always give me bullshit excuses. Oh, I don't know if that's the industry. I don't, But they always say this bullshit. But they jump real hard onto like FES credit repair, which is bullshit. It works. Don't get me wrong. It works, but you paying what? If you go again to xyx.com and go to Project Flip Financial Literacy Improvement Program, this Black man got this shit laid out for you for yourself. I actually worked for a company you guys might be familiar with, National Debt Relief. I worked for them when they made their first $50 million month. So before they were a big company. Now they're a big company competing with Lexington Law. But prior to, National Debt Relief was a little company out of Manhattan. Ironically enough, their office was at 11 Broadway too, across from the Brass Bull. But National Debt Relief is another one of those, debt companies. So, also my life insurance license, my insurance license, I'm credit certified. So again, stop diminishing when someone says they sell life insurance. That's like diminishing McDonald's when Grant Hill comes out with I'm dating myself. Everybody over 40 remember Grant Hill with the feelers and the fucking McDonald's fries, right? Well, that's like saying that and then not realizing that they also have chicken nuggets, apple slices, ice cream, apple pie, coffee, croissants, donuts. You wouldn't know this until you looked at the menu. Did you know as a licensed life insurance agent, I can help you with your life insurance, your long-term care insurance, your disability, your 401k, your IRA, your Section 529 college savings plan? You see what I'm saying? There's your retirement account, your employee benefits, your health insurance, your dental insurance, your will, and your investments. Remember, variable life insurance is an investment. Index life insurance is attached to the S&P 500. But again, when we talk to you about life insurance, we're pouring the concrete. We're digging the hole and pouring the concrete. So those financial professionals are actually trying to fucking help you. So let them fucking help you and stop going and paying a nigga $10 to say, you're in my NASDAQ class. I'm going to teach you how I invested. But then do shit like shit on Jay Morrison, who went through all the proper channels and steps with the SEC, Security Exchange Commission, which is the federal government. This man went through scrutiny. He used to sell fucking cocaine. He went through scrutiny for y'all niggas so he could give y'all a brick for $500 to invest in a crowd fund. And then niggas turn around and call him a scam and shit on him. No wonder niggas don't do shit for you. No wonder when niggas get in a position like me and then we come fancy, you call us coons and sellouts, and then we turn around and say, well, fuck y'all niggas. We're just going to take our money and move the fuck on. No wonder why niggas get money and go fuck white women. Because y'all Black women think you entitled to a nigga when he get money. But Black men don't think because you get money you entitled to the baddest bitch. Because you're not. You still have to have swag and game of some sort. And here's one thing. I said it earlier. Competition, just like there's competition amongst men. Right now, 12 of y'all, I could be like, I will bust your ass in 2K. Everybody gonna be like, yo, what's your PlayStation name, son? What's your Xbox name right now? Now, Kareem Austin, I forgot. Damn, I done went so long. I forgot what I did the two about. I did the two about, what was it? A hedge fund and a mutual fund. I really got to start writing this down. I apologize because I do get passionate and I do fall off. So he put the two in because I said what it is. Put a one if you know what not a hedge fund, a mutual fund, a derivative. God, I have so many things going on in my head. I'm gonna run it back and figure out what it was. If somebody could type in the chat what I asked y'all to type the two about, because I keep dropping mad gems. What was it? Hedge funds, mutual funds. God, there's so many other funds. Derivatives, Forex, licenses. Well, y'all will remind me in a second. I'll continue reading. So the number of operating hedge funds has grown as well. There are around 2,000 hedge funds in 2002. Estimates vary about the number of hedge funds operating today. This number has crossed 10,000 by the end of 2015. However, losses and underperformance led to liquidations. By the end of 2017, there are 9,754 hedge funds, according to the research firm Hedge Fund Research. Oh, PIMCO, yes. So PIMCO is PIMCO, and PIMCO is the largest mutual fund in the world. So PIMCO, ironically enough, anybody who has like a stash account or an Acorn account or a Robinhood account, many of your ETFs or your mutual funds have PIMCO in them or are owned by PIMCO or are on PIMCO, because PIMCO, PIMCO, is the largest mutual fund on the planet. Thank you, Chronicle, for dropping that in there for me. And yeah, I'm trying to drop this heat for y'all, man. I'm just trying to, spit that hot fire. So I'm gonna finish up here real quick because I'm experiencing some chronic pain, so I need to go take my medicine. So key characteristics of hedge funds. They're only open to accredited or qualified investors. Hedge funds are only allowed to take money from qualified investors. Individuals with an annual income that exceeds $200,000 for the past 2 years, or net worth exceeding $1 million, excluding their primary residence. As such, the Securities and Exchange Commission deems qualified investors suitable enough to handle the potential risks that come from a wider investment mandate. They offer wider investment latitude than other funds. A hedge fund's investment universe is only limited by its mandate. A hedge fund can basically invest in anything: land, real estate, stocks, derivatives, and currencies. Mutual funds, by contrast, have to basically stick to stocks or bonds and are usually long only. They employ leverage. Hedge funds often use borrowed money to amplify their returns and also allow them to take aggressive short positions, depending on the fund's strategy. As we saw during the financial crisis of 2008, leverage can also wipe out hedge funds. 2 and 20 fee structure. Instead of charging an expense ratio only, hedge funds can charge both an expense ratio and a performance fee. This fee structure is known as 2 and 20, a 2% asset management fee, and then a 20% cut of any gains generated. So again, when you're sitting there with your broker thinking you're making a bunch of fucking money off Tesla, I'm taking 20% of what you made plus 2% of what you're worth. So what did you really come up? Nothing. But you feel good because you sound like you made something because you think you're in the stock market. Wealthy people do not play the stock market for gains. They play the stock market for preservation of capital because the country grows at an inflation rate of 3%. So what that means is your $100,000 in 2020 with an increasing inflation of 3%. By 2030, that $100,000 worth is cut in half and will now equal $50,000. This is the purpose of going into the stock market, not to try and get fucking rich. So, special considerations. There are more specific characteristics that define a hedge fund, but basically they are private investment of vehicles that only allow wealthy individuals to invest. Hedge funds can do pretty much what they want as long as they disclose the strategy up front to the investors. This wide latitude may sound very risky, and at times it can be. Some of the most spectacular financial blowups have involved hedge funds. That said, this flexibility has afforded to hedge funds has led to some of the most talented money managers producing some amazing long-term returns. Excuse me. It is important. Damn, this is a long little bit of rest of the article. It is important to note that hedging is actually the practice of attempting to reduce risk. But the goal of most hedge funds is to maximize return on investment. The name is mostly historical, as the first hedge funds tried to hedge against the downside risk of a bear market by shorting the market. Mutual funds generally don't enter into short positions as one of their primary goals. Nowadays, hedge funds use dozens of different strategies. So it isn't accurate to say that hedge funds just hedge risk. In fact, because hedge fund managers make speculative investments, these funds can carry more risk than the overall market. Below are some of the unique risks of hedge funds. Concentrated investment strategy exposes hedge funds to potentially huge losses. Hedge funds typically require investors to lock up money for a period of years, meaning that there's a high period of illiquidity, meaning that you investors who want to invest think about investing isn't about, it's about illiquidity, not liquidity. So someone who says they have a net worth, they don't have money that they can go to the bank and get. They have money that's tied up in things. Usually your net worth is of illiquid assets and you don't have money in the bank to go get. Use of leverage or borrowed money can turn what would have been a minor loss into a significant loss, because generally hedge funds operate off of OPM, which is why hedge funds tend to turn into Ponzi schemes. I don't know if anyone knows what a Ponzi scheme is, but long and short, Bernie Madoff was a Ponzi scheme. Hedge fund manager pay structure. Hedge fund managers are notorious for their typical 2 and 20 pay structure, whereby the fund manager receives 2% of assets and 20% of profits each year. It's the 2% that gets the criticism, and it's not difficult to see why. Even if the hedge fund manager loses money for you, the client, he still gets 2% of your assets. For example, a manager overseeing a $1 billion fund could pocket $20 million per year in compensation without lifting a finger. That said, there are mechanisms put into place to protect those who invest in hedge funds. Oftentimes, fee limitations such as high watermarks are employed to prevent portfolio managers from getting paid on the same returns twice. Fee caps may also be in place to prevent managers from taking on excess risks. How to pick a hedge fund. So with so much drama in the LBC, y'all better vote for me like y'all did for what's the bro who sang Atomic Dog, who's now VP. With so many hedge funds in the investment universe, it's important that investors know what they are looking for in order to streamline the due diligence process and make timely and appropriate decisions. When looking for a high-quality hedge fund, it is important for an investor to identify the metrics that are important to them and the results required for each. These guidelines can be based on absolute values, such as returns that exceed the 20% per year over the previous 5 years, or they can be relative, such as the top 5 highest performing funds in a particular category. For a list of the biggest hedge funds in the world, read What Are the Biggest Hedge Funds in the World on Investopedia. So funds absolute performance guidelines. The first guideline an investor should set when selecting a fund is the annualized rate of return. Let's say that we want to find funds with a 5-year annualized return that exceeds the return of the Citigroup World Government Bond Index, WGBI is its ticker symbol, by 1%. You see, we're not talking large numbers because, again, when you're talking pennies are for millionaires. All you niggas excited about this 1600 and bullshit need to realize that pennies are for millionaires. And when you're investing pennies. It just so happens to be that you're investing 2 million or 2 billion pennies versus $200, $2,000, $22,000, $220,000 versus $2 million, $200 million, $20 million, $200 million. See the difference in the way that shit rings? What is the benefit tax-wise of investing in a hedge fund? We'll get to that later. You don't even want, that's a whole nother 2 hours. I'm not talking about taxes right now. So again, this filter would eliminate all funds that underperform the index. Wait, didn't I talk about indexed life insurance tied to the indices? Shit, this is all coming full circle. So everything in the financial world goes hand in hand. So is this your, wait, didn't I say dig a hole, pour concrete in the dirt? Ain't that how you start building a house? Now we're starting the floor. We're filling it up. We're building the floor. Now you can go to your investments and shit because you're building the floor. The guideline will also reveal funds with much higher expected returns, such as global macro funds, long biased long short funds, and several others. But if these aren't the types of funds the investor is looking for, then they must establish a guideline for standard deviation, Once again, we will use the WGBI to calculate the standard deviation for the index over the previous 5 years. Let's assume we add 1% to this result and establish that value as the guideline for standard deviation. Funds with a standard deviation greater than the guideline can also be eliminated from further consideration. Now, again, I want to talk to people who say, license means fuck all, because I'm going on Investopedia, which you all can go to too and read this, right? And I can show you how to do exactly what I'm doing, and people will say, be wary of it. And I'm not worried about it. Why? Because there's something called implementation, right? So you can go read this, just like I have brothers who do stuff in STEM, or like I had a brother who did some health stuff, and I just ordered some health. He's an herbologist, and he was telling me, he was like, bro, you got a juice, so you don't, here, I'm gonna tell you for free what juices to go get. And I just paid him $75 to go to send me the herbs, dude from Texas. You know why? Because I was like, bro, I understand that you're able to tell me all of this shit, but I'm not an herbologist. So I'm going to get all of this shit and fuck it up because I don't know what the fuck I'm doing or what the fuck I'm talking about when it comes to herbology. So it's the same thing when it comes to finances and financial services. You can look and do it yourself because YouTube University, but you don't YouTube University how to cut your fucking hair. because you zeke yourself, because you don't know what the fuck you're doing or what the fuck you're actually looking at. But I went to training and schooling for this, or financial professionals went to training or schooling for this. There's a dude who I'm gonna speak on. I'm gonna do Man's Viewpoint. I can't think of his name. He was like, yo, the dude from Antoine, not Twan Holmes. What's the other one? Taran Anderson. You know, Trapped with Pretty Girls in Fitness. He's like, oh, I do my investments on my own, dog. Nigga, you wouldn't tell that. Nigga, I work out on my own. I get my physical fitness on my own. Diminish the fuck out of what the fuck you do, because what you don't matter. I could go on Google and Google a fucking yoga lesson. But that won't fucking actually get me right, because you have the actual expertise and knowledge. And when you and I sit down and talk about the specifics, it's going to be a whole lot different than somebody telling you to download this app on your own and get some fucking pips and dips. So stop falling for the bullshit, the malarkey. And then come and ask niggas like me after your shit's fucked up, what do? I don't know what the fuck you do. You go back to the motherfucker that fucked you up. Oh, you can't because he ain't had a license, so you can't even sue him like you could me. I got sued for $1 million. The bitch won 410 grand. Look it up. So, where were we here? Unfortunately, high returns do not necessarily help to identify an attractive fund. In some cases, a hedge fund may have employed a strategy that was in favor, which drove performance to be higher than normal for its category. Therefore, once certain funds have been identified as high return performers, it is important to identify the fund strategy and compare its return to other funds in the same category. Damn, I thought investing was easy. You just throw the money in there and it grows like Tesla. To do this, an investor can establish guidelines by first generating a peer analysis of similar funds. For example, one may establish the 50th percentile as the guideline for filtering funds. Now, an investor has two guidelines that all funds need to meet for further consideration. However, applying these two guidelines still leaves too many funds to evaluate for a reasonable amount of time. Additional guidelines need to be established, but additional guidelines will not necessarily apply across the remaining universe of funds. For example, the guidelines for a merger arbitrage fund will differ, from those for a long-short market neutral fund. You know what? I got like a whole nother damn page. This is going to go for a long time here. So what I'm going to do, because I've been going, hey, you know what? Let's do this. Taxing hedge fund profits. When a domestic U.S. hedge fund returns profits to its investors, the money is subject to capital gains tax, which is currently 20%, not 15%. That says it here. U.S. hedge funds returns. So capital gains tax, this is another thing. When you're looking at like things like your Roth IRA or your 401k, right? So you're paying for it with pre-tax dollars. So your Roth IRA or your 401k paying for it with pre-tax dollars, when it annuitizes or pays out, you're going to pay income tax, not capital gains tax, because you didn't pay income tax back then on it. So you're growing it tax deferred, which sounds cool. Tax deferred. I'm not paying no taxes on that money right now. It's tax deferred. Yeehaw. But then when you're retired and you're not able to go earn income and you're in a lower tax bracket and now you're receiving this annuity and it's a fixed income and you don't have the virility to go out there and earn income, you're going to be taxed at an income tax bracket versus a capital gains tax bracket. Hi-ho, motherfucker. You played yourself to get a fancy sounding item, but the motherfucker who sold you got a great commission off it, but didn't educate you. But they got a great commission off of that shit. I bet you they never did an annual review with you either. How many Negroes do you have life insurance? I already got it. Oh, when's the last time you had a review? Last week. No, the fuck you didn't. But you tell me that because you don't want to talk about life insurance, because you think life insurance is a check for somebody when you die. So anyway, folks, I'm getting dry mouth like a motherfucker. I was up late as hell listening to the Manosphere till like 5 o'clock in the morning because I love y'all niggas. And I want to, work with y'all as much as possible. Oh shit. Thank you to Rashid J. Davis for the Cash App. Rashid, good looking for Cash App, Brody. We in here. Looking forward for more of those. That's gonna help me create content and continue to educate y'all. So I appreciate that. Now I gotta go pay it forward and give this to somebody else. So with that, y'all, actually, I appreciate that sheet. I'm gonna use that towards getting my WMCP. So if y'all think I know a lot now, right? I don't know if y'all saw. Actually, I don't know if I can go to my YouTube. If I can, I want to go to my YouTube and show you guys a video that I did from the Conference of African American Financial Professionals. I don't know if this video is stopping now. No, it's still going. Okay. So I want to see if I can show y'all this video. It's real brief. From the Conference of African... Oh, I got to hop off. My girl Crimson Cure on. But from the Conference of African American Financial Professionals, which was held August 4th, 2020 this year. It was digital this year. Okay. You know what? I know what I can do. I'll make sure that I don't mess this up. I'll go to my alternate channel. So this alternate channel is a channel that I created years before my Alonzo Hall channel. And I have some great video content up here too that is about, again, insurance and a bunch of other shit. But I want you to check this.
Hot water. 7 years. 5 times almost lost my house. I did lose 2 cars in the process. A couple times I had my water and electricity cut off in the house. 7 years. But the Bible says it came to pass not, it came to stay, and there I am with W. Clement Stone. And he told me, he says, young man, when you finish this book...
Now, while y'all are here, what I want you to look at is this right here. That says the American College of Financial Professionals. The president and CEO of the American College of Financial Professionals is a black man. The issue while I was here at the Conference of African American Financial Professionals is that 5% of the industry, of that industry, licensed, looks like me. 5%. So this is part of the reason that we have that financial wealth gap.
If you can't save 10% of everything that you earn, the seeds of greatness are not in you. Make thy money grow. Well, there you are right there. I want to come down and close this out. I've had an opportunity to interview so many people, and I wrote a book. My 4th book is called What Keeps Me Standing. And in this book, for a 5-year period, I went around the country and I asked 1,000 black grandmothers. I could have focused on any demographic, but these were the individuals who were nearest and dearest to me at the time. I asked these 1,000 black grandmothers, I said, if you could write one letter to your children or to the next generation, what would you tell me about life? And I know what you're thinking, financial advisors. What in the world is...
So I show y'all that to show y'all this, which is American. Okay. So this is something that people like myself, the financial services industry, go to. There's a fucking college for financial services. There's a fucking college for licensed life insurance agents. Again, you're going to learn further concepts. Right, that video is on my page. So if you go through my videos, it's up there. Unless you mean the link to this video. Did you want to come on? Hold on. So I want you to see here, the American College of Financial Services. Now, I also did an article, I read an article about this, which I will be releasing Monday and Tuesday. It's actually that article. Okay. In fact, but here's what I want to do. So you see it says enroll now. Actually, let's do this. Designations and degrees. So whenever you see a life insurance agent and they have these weird numbers and letters behind their name, that's what they are. This is the final certification I'm going for, which is the Certified Financial Planner, which I could go for. But right now I want to start with WMCP, Wealth Management Certified Professional. So you'll see me add those designations behind my name so that I can better serve you. So just think about the service that I just gave you guys. And you guys weren't even sitting down with me as a client. And all you know is that I sell life insurance. And on the life insurance level, I just educated fuck all out of you. Did you know that life insurance, certain life insurance policies do pay dividends, just like your stocks? And they pay dividends a lot higher. The reason life insurance companies are so strong, when you look at them on Moody's or S Standards and Poor's, which are financial rating companies, or AM Best, which is financial rating companies, like AM Best, Moody's, Standards and Poor's, while Obama was in office, they degraded the credit of America to an A-. So America's got bad credit as it stands. But these are the type of things that I learned better to teach you. So again, and yeah, I'm saying it because I'm taking it personal, because I've been hearing this bullshit for all too long. And then I see all this shit like this Cameron Duncan kid who's a year old who's dead. But we ain't getting life insurance on kids, but we want to get all the, I put money in the bank account for my kid. It grows at 0.75%. But then I tell you life insurance grows at 2%, which means you putting money in a life insurance policy is getting your fucking kid $2 a month. But you want to get your kid 75 cents a year. What's good, Ra? Go ahead and speak. I'm getting ready to close out soon, but I need to hear you speak.
Peace, man. You're doing the Lord's work up here, man. You're doing the damn thing, man. You know, these are just the type of conversations that's going to have to be had. The reality is that this is something that I say all the time. Love costs, and even love need a place to stay. And so, to me, the best demonstration of love, as far as I'm concerned, from a man's perspective, and just overall, is the willingness of you to not see the people you care about live poorly. That's just an existential struggle, like, because Ecclesiastes 10:19 says, food makes for laughter, wine makes merry, but money is the answer to all things. And it really confuses a lot of people when you say that, because when you look at most of the problems that people have, just humans have overall, it stems from not having a lot of resources. And if you can solve the money issue, you can pretty much solve most of your problems. And the other ones that are left, hey man, figure it out. You know what I'm saying? But most of the problems that we have across the board really stem from not having a lot of resources, which ultimately puts stress, on relationships and things like that. And the thing about it is that because we live in this country, there are ways of building wealth. There are actually options and solutions. It's not like we're living in Somalia. You know what I'm saying? So we just have to use these financial tools to our advantage to grow the wealth. But you have to to be able to do these things, you have to be of a family mindset. Your mindset has to be family. All these things are centered around family. That's why, the estate planning aspect of the stream yesterday was so important, because I like the way, Allison, she gave those real life scenarios that really showed people like, you got to get your house in order. And so,
Not to cut you off, but I have in fact, after this, I'll share the real life scenario so that the gentleman here can get the impact that you got from Allison.
Okay. And so you hearing some of those horror stories, and I know she has even worse horror stories than that. Those were pretty bad. So it just goes to show you how, Black people, Kevin made a very good point last year, I think it was, when he said Black people are basically like the House of Stark on Game of Thrones. The House of Stark is very self-righteous, always trying to do the right thing, all the time. But every time you turn around, somebody in their family is getting their head chopped off. Not willing to play the game. And so this is the game that exists out here. It's a monopoly game. The issue is that it has real life consequences. And so by not being a good steward of your family and your family structure, you're going to have broken families, and not being in control of your financial tools that can help you grow the family in a positive way can really cost you. So I really appreciated Allison's, presentation yesterday, because she really brought it home from the family aspect of finances.
Yes. So definitely she did bring it home from the family aspect. So, Rod, I think what I'll do is I'll probably go ahead and share that story and then close out. What I am going to do, though, as a promise to the Manosphere, since I like what's going on and I've been watching 24/7, like I don't even watch TV no more. I'm always looking for who is on live or who's what and following content. And I thank you all for that. So one of the ideas that was popped out there, and like I told y'all, man of action, I'm a man of action. You tell me something, I just kind of got to start going. So in being a man of action, one of the things that we were saying was, well, we should just start streaming content fucking 24/7. And so if we just start picking slots and start streaming content, there's all sorts of different content. For example, somebody starts streaming some content about health, so we can start being health conscious, so we can stop dropping dead from heart attacks at 40, Black men. So we can stop having these clogged arteries, Black men. So we can start building empires and nations, Black men. So we can really have our Black women respect us. So when someone like Kevin Kelly comes to these Black women the first time and they're twerking and he says, stop it, they stop. They don't be like, yeah, fuck you, nigga, and then do it again. Yeah, fuck you, nigga, and then do it again. And only respect you when you bucket them. And then they're like, oh my God, and make you look like the bad guy anyway. We gonna change that narrative moving into 2021. Is get down or lay down. But as I was saying, so in situations of estate planning or an estate loss, I had a client, a gentleman, who had a property in Brooklyn. This was while I was doing my fix and flips in 2013. So I contacted him and I said, hey, blah, 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 I see the house is in foreclosure, so on and so forth. He ended up saying, well, no, the house is actually in my mother's name, which actually through the lead list and when you are in the fields that I'm in and you research people and you get their names and phone numbers, there's ways in which you can find up to the third degree separation of a person. So that's how I got his info, because the mother, who was the owner of the home, I had called, and the number that I had for her was out of contact. So I called the next of kin, which was him. And he said, yes, my mother died. And I said, well, I'm calling about your house, blah, 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 blank street, Brooklyn, New York, blah, blah, blah. And he was like, oh, yeah, well, I'm not worried about it right now, whatever, whatever. A few months passed. He lost his security job in Atlanta. He then called me, hey, so about that house. Oh, yeah, we can help you with that house. Well, unfortunately, because his mother died and didn't have life insurance to pay the balance on the house was in foreclosure. Nobody else was paying any of the fees or balances or taxes or maintenance on the property. So the state was going to take the home. So he says, listen, how can you help me? Well, I need you and your sister because you guys are both next of kin. And because there's no will, the state decided that it wants to sell the home because it's in foreclosure and give both of you any equity. But because it's in foreclosure, it's going to be a short sale. And when it's short sale, it's just like if you're selling drugs. You take a short, meaning that you are taking a loss. So when you are selling the house at a short or a short sale, the bank is saying they are willing to take a loss, but the seller is going to walk away with zero profit. So this mama did a beautiful thing by trying to leave real estate to her family, but she didn't do the proper thing in having a proper estate plan. She died prematurely and didn't have life insurance to not only pay the mortgage, but to pay the continuing property taxes. Because once you own a house free and clear, there's still payments that need to be made. Because in America, even though you own the land, you don't, and you have to pay taxes on it. Go ahead, Rod. I saw you were about to say something.
No, I hit the button by mistake. Go ahead.
No problem. So when you're looking at her situation, his situation, again, having that life insurance, having that will and final testament would have been great. Now, this is a Black man who has a baby mama and 2 kids, who's living in Atlanta, Georgia, who was working as a security guard, who now can't protect and provide for his family because an estate plan wasn't put into place. So something out of his control, which was losing his job and his mother dying, something that was placed to protect, which was mother buying a house, which we do, Black people, let's buy a house. But then we didn't put our foundation in the ground in buying that house. So when the wind blew, it knocked the shit over. Because now he don't have the house, the money from the sale of the house, or his mother, or the money that his mother would have left to him from the house or anything. Neither do his children get to benefit from the legacy of that house being in the family. But if there was a life insurance policy, at least that burden would have been taken care of. Okay, so those are some that's a real situation. Like the dude, I know the dude, like real talk. Like he called me on my cell phone. Like he called me recently and was like, "Yo, can I borrow $2, $200?" You know, I'm like, "Damn, son, I don't know you from Adam. We was doing business one day back in 2013, but Black man, I got you if I got it." You know what I mean? Especially knowing his situation, his circumstances, and it's not like we only talked one time. You know what I'm saying? So I felt for this brother. You know what I'm saying? So I'm gonna end it like this because I have a few things going on that I want to make you brothers privy of. One of the things, Ra, I think you spoke to me about, and I am working on looking at some of those pages and getting those grants that you've been talking about. But I'm also trying to, like I told you, I'm trying to hit the MDRT. And so, like I said, guys, in order to qualify for the elite level of insurance agents this year, I need to collect $122,000 in premium for the year. And right now, as stands, I'm at $115,000 for the year. So I need like a little under 10,000 to qualify. That's the lowest qualifying level. Obviously, I want way more than 10,000 because I'm a supremacist. So I want to go dominate them crackers. But to just bottom basement qualify to be in the room with the elites, I need another 10,000 in submitted premium. So if anybody thinking about getting something, sit down with me this month. We'll fucking put the policy together to get your foot in the door, and I'm only going to put you into something that will allow you to alter and change. And I, as a financial professional, am playing the long-term game, right? So when I sell you a policy, I like I said, I do alternative concepts. So I ain't just trying to sell you a piddly-piss policy because that doesn't make me money because you won't keep it. You'll cancel it. And I'm responsible for you paying for it for 13 months. So if I get you a small-ass policy that you don't care about and you cancel it 9 months later, they take my commission back. And I don't play those games. I can't. I have real bills too, so I can't depend on motherfuckers being like, "Oh, he was shitting on me. I'm canceling this." Nah, I'm gonna make sure you keep it for 13 months so that I earn my pay. But I have a few things that I have in the works. I am working on a hedge fund. I will be working on a not-for-profit so I can do more education things like this, but actually be able to offer this to my people. I am also working on purchasing a property in Brooklyn, New York with a friend of mine. The property is $925,000. If you have anyone who is a real estate attorney or a securities attorney, we do have the $15,000 to pay you for a PPM. Again, we do have the $15,000 to pay you for a PPM. So any of my gentlemen out here in the manosphere, which is nothing but a bunch of high value men, and part of being high value is having that network. And this is what we're doing. We're networking. So your network is your net worth. So we're networking. So any attorney out there who deals with, real estate or securities, please contact me, because we do have, myself and my business partner, I have corporate seal, I have articles of organization, so we're officially an LLC. But we want to borrow this money not for profit, and $1 million is not a cheap amount. But our goal is to make that into a 1-year men's shelter, and it's not going to be your traditional shelter. It's not a shelter in the terms where you can just come there and get some money. This is where men are at shelters, and they now have either a housing voucher or they are working on their own, and they're living out of their car. I know some gents who are like that. You get 12 months in this place, and it's going to be a room for rent. I know it doesn't seem like it's a whole lot of help, but it's better than what's already offered. We got WIC and everything for women, but we have get a job, you bum, for men. So in terms of that, my goal is to have this start in New York and then hopefully branch out to my home state of Connecticut and across the nation. If gentlemen have any ideas or want to be a part of it, you know how to reach out to me. Please do so. I'm a man of action, not of words. So if anybody else is a man of action and not of words, we will be connecting. Maybe not today, maybe not tomorrow, maybe not for the next 6 months, because we are men of action, so we're doing things. But with that being said, I want to say peace and Black power. I'm going to go ahead and close us out with a little bit more of my music so I don't get no copyright shit. Peace, Black power, one love, I'm out.